How's it going, everybody? And welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going to be going over our number one buy setup and our number one sell setup of the day. Now, before we get into that, we're going to look at two things really quickly. First, starting off with COT data. Now, before we actually get into the COT data, I want to mention something really quickly. If you like what you see today out of the Edge Finder, I want to let you know that right now we are doing the Edge Finder for 30% off. And this is not going to be around much longer. In fact, there's only a day or two left to get it at 30% off. So if you've been thinking about it for a while, or you like what you see today, check out the links down in the description below or our website, a1trading.com, and check out the Edge Finder. You can get it for 30% off right now using promo code A1YT at checkout. But with that, let's go ahead and dive on into the COT data. This is the commitment of traders data, and it shows us what institutional traders are buying and selling. Right now, we see the same three at the bottom that we've seen the last 2 weeks now. It's the Canadian dollar, the Swiss franc, and yields here in the US. The Canadian dollar being the most short out of all of them, here at 87% short, followed by the Swiss franc at 77.4%. So these two have been the most shorted for a long time. At one point it was the Japanese yen, but now the yen is sitting up over 50% on the long side. So it's come a long way from being the most shorted asset from institutional traders, now sitting around 50-50. The dollar is also on the come up at 66.93% long from institutional traders, and we still see the same three most long assets as well, being oil, silver, and then gold being the most long asset from institutional traders. Right now, 87.54% of open contracts on gold from institutional traders are long contracts. The latest weekly COT filing shows us how COT positions have changed from last report to the most recent report. So basically, week by week, you can see how institutional traders' positionings bias, how many long and short contracts are they opening or closing. We can double check and see how all of that is shifting on a week by week basis. For example, if we look here at the top, we will see our most positive change of the week was actually the Australian dollar. We see an increase of 10,932 long contracts and a decrease or a closing of 8,794 short contracts. Now, overall, it is still pretty close to 50-50, and in fact, it is actually technically a little bit favored here on the short side at 55%. Now, that's not a very strong bias to the short side. We are not going to score that one way or the other because, again, it's really just too close to 50-50 for that. But we do see sentiment shifting in the opposite direction. We see the overall net change percent of 5.54%. And again, all of these long contracts getting added, all of these short contracts getting closed. It will be interesting to keep an eye on that, moving into next week as well, to see if this trend continues with these short contracts getting closed and more long contracts getting opened. And we'll see if we can move this into the long percentage favored. So we'll have to keep an eye out on that moving into next week. So if you want to look further into the latest weekly COT filing, feel free to pause the video because I'm going to go ahead and move on into retail positioning so that we can get an idea of what day traders have been buying and selling. So let's start with our major currency pairs first. And we score day trading positions with a contrarian signal, meaning if the overall majority is looking to go long or looking to go short, then we are oftentimes looking to do the opposite. Not every time, but more often than not, the overall crowd is wrong, and so we look to do the opposite. And this is just one of many metrics here that we score in the Edge Finder. You can see the overall score here on the left, but all of these different metrics here are getting scored automatically here in the Edge Finder and tallied up to give these overall scores and biases. So The retail positioning here is just one of many things that we go off of that we score our biases off of. So did you know that we have 100% free trading tools and data available for you on our website, a1trading.com right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com. USD CHF is favored up over 60% here. We see it at 79% long, 21% short, and USD CAD also favored above 60% on the long side. We see 68% long here, 32% short. So those are both getting bearish signals. NZD USD, Euro USD, and Pound USD are all favored up above 60% on the short side of things, and that is why they are blue and getting a bullish signal here. And again, that is just one of many different metrics that goes into the overall bias of scoring all of these assets. Moving on to minor currency pairs, we see a big list here of all of these things here. These are all favored up above 60% on the long side, whereas these down here are favored over 60% on the short side of things. Finishing up, we'll do indices, metals, crypto, and commodities all in one. And here's our big list of all of the things over 60% on the long side from day traders. And just the Dow or the US 30, that is the only thing over 60% or at 60% on the short side of things from day traders. So with that, let's go ahead and move on into top setups, and I'm going to remove any neutral biases that we may have. So here we go. Really short list of stuff today. That's one of the cool things about the Edgefinder. It is constantly looking for new data throughout the day so that it can be as up to date as possible with everything going on in the trading world. And right now we have a pretty short list with no very bullish or very bearish biases. We only have 3 bearish assets: Aussie CAD, Pound Swiss, and Aussie Swiss, and only 4 bullish biases with Euro USD, NZD USD, Pound Aussie, and Pound USD. Now, if you've been keeping up with the US economic data, it has been a wild past 2 weeks in terms of jobs reports. The jobs data coming out of the US right now has been really, really bad. And tomorrow is NFP, and that is going to be huge, because if NFP comes out as bad as the rest of the jobs data that we've been getting over the past 2 weeks, we might have a serious problem on our hands when it comes rate cut time, because everyone has been forecasting rate cuts here in the month of September. Finally, we've been waiting on rate cuts for a very long time, and it seems like over the past couple of months, the Fed has actually gotten inflation under control just a little bit. It dipped below 3% for the first time in a very long time. It's still not at their target level of 2%. I believe it's sitting at 2.9% right now, but this is the first time that it's actually dipped below 3% in a long time. And so it seemed like the inflation issues that we've been dealing with are finally coming to a close, and rate cuts are finally here. But just before the rate cuts happen, we got really bad jobs data. The unemployment report, the ADP non-farm payroll event, all these different things have been coming out. The revisions from those events as well is coming out really negative. And again, we have NFP tomorrow, which will be the final deciding factor of how bad the economic jobs numbers look here in the US. But right now, it doesn't look good. So Euro USD is our top bullish setup, buying the euro and selling off the dollar, largely based on this poor economic data that has a score of +7. So we'll definitely check out Euro USD. And then our most bearish asset right now is Aussie Swiss with a score of -6. So those are the two that we'll take a look at today. And we'll start off with the euro. So, like I just mentioned, the Euro USD has a score of +7 and a bullish bias. COT data is a 0 or neutral score, and retail sentiment is a score of +1. Taking a look at that COT data, we see both the euro and the US dollar favored over 60% here on the long side, and both of them have positive weekly changes. So it's really not leaning one way or the other in terms of long or short bias. They are both looking bullish in terms of COT data. Retail sentiment, on the other hand, shows a clear favoritism to the short side from the day traders, and that is why it's getting that +1 score there. Seasonality, however, is a -1 score, and we can see that historically speaking, over the last 10 years averaged together, typically in the month of September, Euro USD trades lower. However, our trend reading score is a score of +2, and we can actually take a look at what that daily price chart looks like by heading on into price forecast. We actually have the Euro USD pulled up right here. So for most of the month of August, we saw a strong upward trend on Euro USD, and then just before September, it started to drop. However, from today, from September 3rd, so the last 2 days actually, we have seen a little bit of an uptrend here on Euro USD, and price forecast is predicting that that'll continue to be the case moving forward. Let's finish up with our fundamental data now. We see a GDP and retail score of -1. Manufacturing PMI, employment change, and unemployment rate have scores of +2. Inflation has a score of +1. Services PMI a 0 score, and interest rates also a 0 score. Now, when we're taking a look at this economic data table, in case you've never seen this before, what we're looking at here is GDPA, that would be the euro because it's listed first, and GDPB would be the US dollar because it is listed second. And you can see A and B in these columns here. So this is the euro column, and this would be the dollar column. And we are looking at whether or not it met, beat, or missed the forecasted economic data. So, for example, I can see here that the euro met its GDP data, whereas the US dollar actually beat its GDP data, and that is why it's getting a -1 score here, because overall the GDP data in the US was more positive than the one for the euro. Now, if you want a more in-depth breakdown of GDP data, PMI data, retail data, unemployment data, interest rate data, we have all of that here in our fundamental data tabs, where we have logs of backup, data from past years, months, all that stuff. It gets really in depth in here if you are interested in looking at that stuff. However, in these data scanner pages, we wanted to make it quick and easy, just give you the simplest explanation for what happened so that you can get on with your trading. And if you want to go more in depth, you also have that opportunity to do so down here. But let's take a look at manufacturing PMI. As we can see that euro manufacturing PMI was a beat, and it was a miss for the dollar. So that is a +2 score here because we beat it in the euro area and we missed it in the US. Services PMI both met for the euro and the US, so that is why we have a neutral score here. And then similar to GDP data, the euro area just met expectations. They did not beat expectations, but the US did beat expectations, and that is why we have a -1 score there. CPI forecasted for the euro 2.2%, and that is what it came out as. But like I mentioned a little bit earlier, here in the US, forecasted at 3%, inflation actually dipped down to 2.9%. Finishing up with the unemployment rate, we see that the forecasted unemployment rate in Europe was 6.5%, and it ticked a little bit lower down to 6.4%, whereas in the US we saw the opposite, forecasted at 4.1%, but ticked higher up to 4.3%. And again, that is something that we hope that we don't see tomorrow with the NFP event, or else that is going to be a serious problem come rate cuts later in the month with all of this bad economic jobs data that we've been getting here in the US as the dollar continues to tank lower and lower. So with that out of the way, there is all of the data and numbers backing up that bullish +7 score here on Euro USD. The other pair that we said that we were going to take a look at was Aussie CHF with a solid -6 score and a bearish bias. COT data is a 0 score and retail sentiment is a score of -1. Taking a look at that COT data, we can see that the Aussie dollar is sitting around 50-50, so not much to score there. But the Swiss franc is actually heavily favored short at 77.74%. However, both weekly changes for the Australian dollar and the Swiss franc were positive this week. Retail sentiment, however, shows a heavy favoritism to the long side on Aussie Swiss. That is why we have our -1 score there. Seasonality is also a score of -1, and we can see here that seasonality says that over the last 10 years averaged together, in the month of September, historically speaking, Aussie Swiss tends to trade lower, and our trend reading is only a score of -1, but that means that it has likely been trending lower, not super heavily, but a downtrend nonetheless for a little bit of time now. So let's actually see what that looks like. Aussie CHF, and yeah, so we can see that there was a bit of consolidation here towards the end of August, but starting the month of September and the past couple of days, we've seen a little bit of a downtrend here in Aussie CHF. Price forecast predicts that that is going to continue to be the case. Let's finish up with our fundamental data. GDP is a score of -1. Manufacturing PMI and retail sales have -2 scores. Inflation and interest rates have +1 scores. Services PMI, employment change, and unemployment rate have 0 scores. So same thing here like we saw with Euro USD. GDP-A, this is going to be our Aussie dollar, and GDP-B is going to be our Swiss franc. So in Australia, GDP expectations were met, but they were beat in Switzerland. Manufacturing PMI was a miss in Australia, but a beat in Switzerland. Services PMI were met for both, and retail sales were a miss for Australia, but a beat for Switzerland. CPI data came out as expected in Australia, remaining at 3.8%, but the inflation rate actually dipped lower in Switzerland, forecasted at 1.3%, but came out at 1.1%. The employment change in Australia ticked a little bit higher, forecasted at 4.1%, but came out at 4.2%. And we see the same thing here in Switzerland, forecasted at 2.3%, but actually came out at 2.4%. So there we go. There is all the data and numbers backing up that bearish bias -6 score here on Aussie Swiss. I hope you guys enjoyed this video, and remember, if you like what you see today and you want to get the Edge Finder for yourself, you can find it in the description down below or on our website, a1trading.com. And right now, for another day or two, we are doing a 30% discount. So get it at this big discounted price while you still can. Use promo code A1YT at checkout for 30% off the Edge Finder. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.